Oh,
Oh
happy
no!
Monday.
Happy Monday, everybody.
That's what I get for adjusting the camera last second.
Hey, it happens. We all do it. Okay. Well, here we are. Let's see if people want to come in and file in. And what do we say? Bring their popcorn.
I mean, I don't know that today's show is like popcorn worthy.
Um, yeah, today's kind of a little bit of a serious topic, but it's a
I
good
mean,
topic.
pickles. We can have salty pickles. It goes with taxes, right? No, yeah.
Why? Why do you? What?
Salty, like paying taxes makes people salty and salty, but I don't know. Like in my brain, it made sense. I don't know.
Well, we won't talk about your brain.
That's not nice. That is not nice. We won't talk
I
about
know.
brain.
I know. You know I love you.
I do know you love me. It's okay. Your brain is very much like mine, regardless of if we want to admit it or not.
Yeah, it can be. It can be. So
Yeah.
I know. I'm like, where is everybody? Maybe people don't want to talk about taxes.
Can you blame them? Like, this is a daunting topic for a lot of people, which I think is why we're doing it
Um,
to make it
it,
less.
it's. I think it's necessary, and I think that people. I think people have. Oh gosh, I can't even think of the right word right now. They mistakenly think that the IRS and taxes are scary, and they really aren't, and they don't have to be. It's all a matter of understanding what things are.
Hi, Megan. Okay, but with that, while we don't think they're scary, I think that comes because we have that knowledge and
I know.
I think knowledge is power, right? Like,
Yeah,
knowledge is what makes it less scary.
you said that before. You said that before that it's easy for us because we know what we know. So,
Yeah.
right? So now we're here to teach our audience things that we want them to know.
Yeah.
Yeah.
We're
All
so
right.
excited. Okay, I'm so excited about this. I'm such a tax nerd. So I put that on your post today. I'm a tax nerd. So I'm like, let's talk.
Yeah. So everybody, Amanda's super excited about today. She's like a little puppy.
Yes.
Taxes.
Okay. Literally, I used to joke that taxes were my favorite season of the year. They're not anymore, but it really was my joke when people would ask me, and
What
I
about
would be
Christmas?
like, I loved it.
I
I
know. I think it's fun too. I have, yeah. There's something about it, putting together those little puzzles and making all the numbers line up. Yeah, I know. So I'm going to run the promo or the intro. Let's
see,
run
I
the intro
think
and we'll get started.
okay. I love that song. I love that
I
song.
know it's a pretty cool song, isn't it?
Yeah.
Hello, everyone, and welcome to the Down Home Texas Small Business Show.
Are you reading it off the screen? Because I have to when I
Yes.
say it.
Yes, because I keep forgetting the name of our show. Yes, and today is episode
8.
8. Wow. Episode 8. Let's talk tax.
Let's talk tax.
Let's talk taxes.
Okay, we could talk taxes. Okay, but we're gonna talk taxes instead.
We are. We're going to talk about taxes and give you people out there that are wondering all about it some tips and tricks and some helpful advice.
And
Right?
timely advice. It's such timely advice because people should be, and if you are not, this is your call to action. You should be gathering things. You should be getting ready. So if you haven't kind of started that,
Yes.
let this be your starting point.
Yes. It's good. We tax preparers don't like you to wait till the last minute. So go ahead and get your stuff together. We just actually passed one of our deadlines that we're going to talk about. January 31st was the deadline to not receive, but the deadline to issue 1099s and W-2s.
So what does that mean? Because
What does that mean?
I know I'm getting a lot of questions on this. I am fielding contractors who are saying, I haven't gotten my 1099. I haven't gotten my W-2 from employees. Like we talked about before, those are not the same. So they are under the impression January 31st happens and magically poof, they have it. What actually happens behind the scenes? What actually is supposed to be happening?
Well, the thing is, they actually have until January 31st to have it postmarked that they've issued it and it's out and it's on the way. I'm going to be honest and tell you that there are a lot of people that miss the deadline, especially with 1099s. So,
Why?
Because they don't get the correct information or the enough information to issue it ahead of making payments to people.
So what do you need to issue 1099s? We're going to go through a quick rundown now that the filing deadline's over.
Oh, I didn't know it was going to be a pop quiz.
Sammy, you don't know the answers. No,
Okay. So for 1099, that's a independent contractor, non-employee compensation type thing. You need a W-9 form. So if you're an employee, you fill out what we call a W-4, and that tells people how much they're going to withhold in taxes and Social Security and Medicare and those type of things. When you're not an employee, but you're receiving payments from someone for services, they will request a W-9 form from you. And it's basic information, your name of your business, if you have one, your address, and then your tax ID number. That might be your Social Security number, or if you're operating a business, it could be what we call your employer identification number or tax ID. So that way they know at the end of the year, they have all the information needed to add up how much they've paid you and issue a 1099. They have to issue you a 1099 if they've paid you more than $600 for the year.
For services.
For services, not goods, not products, services.
Services. Okay, so one thing Timmy skipped over on the W-9, and this is where a lot of people you don't have to give me a 1099. On the W-9, you pick which type of entity you are.
Right.
So you're filling it out with your information. You say, I'm a sole proprietor, I'm an S Corp, I'm a partnership, I'm a this, I'm a that. That's the box that tells us whether or not you actually need that. Oftentimes, people will tell preparers, I'm not going to send you a W-9 because I'm exempt. I don't get 1099. That is not true. You still have to send a W-9 to those requesting so that they know you're exempt. So just a PSA, for those of you who said, I don't want to send it because I'm exempt. That's how you let people know that you're exempt.
Mm-hmm. Right. You check the appropriate box. That lets them know that they don't have to issue you one. And you don't have to receive one if you are a corporation, right? S Corp, C Corp, right?
No, S Corp still receive.
Oh, they do? Okay.
Yeah.
Okay. Okay.
Yes.
And then there's another, and another rule about it has to do with attorneys.
Oh, yeah. Attorneys. Megan, do you know the rules? Megan, are you still on? You don't. You do need to send attorneys who have given you professional and legal services.
Right. Right.
Even,
They always get one, regardless of what their entity status is.
yeah. Okay, so that's just a PSA because we're just coming off the filing deadline and we are being inundated. And so we're taking this opportunity to kind of share that with you guys so that it doesn't help with the 2024 deadline, but it will help in 2025, we hope.
Absolutely. And so so here's what we have this saying in the bookkeeping industry: no W-9, no payment.
Yep.
So we like to make sure that we have all that info ahead of time, because the last thing you want to do is come to January 1st and now you're scrambling and trying to contact all the people that you paid over $600 to and get their information, and it's impossible. You can issue a 1099 without a tax ID number.
Okay, so what is the purpose of a 1099 or a W-2? Like from the IRS's perspective, Tammy, what would you say?
Another pop quiz. Okay, what they're doing, you're okay. What they're doing is the IRS is comparing the amounts that are reported as being paid to you on W-2s and 1099s against what you report on your tax return.
To limit tax evasion.
To limit tax evasion. So, for example, if you receive a 1099 for services for $10,000, and on your tax return that year, you do not record that $10,000, you now have a $10,000 discrepancy. The IRS can see that, and that is a red flag to them to send you a love letter and to tell you that something's not right, and they've recalculated for you, which is what they'll do. And now they're going to tell you to pay taxes on that additional $10,000.
And if it's a big enough amount, they might come at you a little bit.
That is true. So that's what the purpose of them are. And then also, from the payer side, if you're taking a deduction, if you run in a business and you're going to take a deduction for wages that you paid to employees or contract labor that you paid to independent contractors, the amount that you take in deductions needs to jive with the amount of 1099s and or W-2s that you filed, because that's another area where there can be a discrepancy.
Yep. And so those are easy ways for the IRS to kind of flag and do some digging to see if you're doing things correctly or not. So we've seen a huge uptick in people. I won't speak for everybody in the accounting industry, who are refusing to give those W-9s. And like Tammy said a little bit ago, you can and should still be reporting, even if they don't give you that W-9. If you have their name, address, and enough identifying information, you still file that 1099 regardless.
Correct. You can file. Sometimes, you don't need to know that. We need to know that, because we're going to be the ones who file them probably for you. If you're going to self-file them, Your bookkeeping software can often do that for you. However, certain softwares will not allow you to file them without that tax ID number. So there are third-party applications you can use to get them filed. And it's a matter of checking a box that says the tax ID number is not available, or they refuse to provide it. So you can still do that, and you should.
Okay, so we spent a lot of time on 1099s. Those are super important. And W-2s. W-2s should have all gone out. They should be hitting mailboxes. Some of them have already begun hitting mailboxes.
Yep.
Why? I mean, the filing opened for the IRS on January 29th, and people are ready to get their taxes done. Some people are like, just get it out of the way. I want it over as soon as possible. And then sometimes we get the other end of the spectrum that are, I'm going to wait as long as possible to file. Those people often get extensions. So, Tammy, you want to talk about extensions? You want me to talk about extensions? I do feel like I'm kind of throwing.
I feel like you're quizzing me, which is funny because you're the CPA and I'm the EA, so maybe that's appropriate. I don't know.
I don't know.
So, an extension to file in general is what it means. It's an extension to file your taxes if you don't have everything together by the deadline date, which is for personal, April 15th. I think this year, though, I think it's April 16 or 17. 16.
Oh, I think only for limited places is it.
For certain places, it's going to be a couple of days later. And then if you're filing a corporate return, a S Corp return, a partnership return, something like that, that's March 15th. So your extension gives you an additional 6 months. They're easy to request. There's an extension form. You fill it all out. You send it in. There's not a yay or nay process. You just send it in, and now you have an extension filed. However, this is an important thing to understand. It is an extension to file. It is not an extension to pay.
Because technically you should have paid everything in by January 15th, 16th this year. That was the fourth quarter deadline.
So, Amanda, question for you. If you're filing an extension for additional time, how do you know what to pay?
Okay, realistically, if you are filing an extension, what we would like to see from a preparer standpoint is that there is something you are missing that means you can't file timely. Okay, so if you have something that's passing through from another entity to you, we are going to talk about some of those amendments on those kinds of documents in a little bit. But say you have a bank statement or not your bank account statement, a statement from an account at a bank, an IRA, or something where you have dividends or brokerage statements. Those sometimes aren't done accurately in time to file for the filing deadline. So in those cases, we take your best guess because you don't know, let's be honest, if you have a brokerage statement that is buying and selling on your behalf, you may not know how much you've gained throughout 2023 until you get that brokerage statement. So there are going to be times in cases like that where you would give that to us and we would then plug it into the software and say, whoa, that gain, you're actually going to owe some more money. If I were you, I'd go ahead and pay that. Lots of people file what they call a zero due extension. Nothing is ever due with an extension. It is an optional payment.
Yes.
So all of that to say, we want you to pay what you can when it's determined that you owe it.
If you file a zero due extension, and then you complete your return by the extended deadline, and you owe, are you charged late fees and a penalty for not having paid with the extension?
Yes. So penalties and interest, those come into play from the minute that it is due. And like Timmy said earlier in the show, the due date being extended for the tax return does not change the due date for the payments. Your payments are due at the original deadline.
Mhm.
Yep. Nope. You still get penalties and interest.
Unfortunately. So, very good. All right. So, let's talk about those deadlines for a minute. March 15th, April 15th are the general tax deadlines that we're working with, and the types of returns that are filed with each one. So, um, like I said, March 15th, the earlier one is mostly for business returns, business type returns. Partnership and S Corp in particular, because with those returns, the owners of the business get what is called a K1 with their share of the net income, net profit or loss to report on their personal return, which would then be due in April. So there's a gap there to allow you time to prepare your business return and then your personal return.
So those are basically what in our world we call flow through items. And so anytime you have a flow through item, you need to have a period in between when they're due, right? If my business return is due on the same day as my personal tax return is due, it's one thing if I'm doing both, but what if somebody else is doing my business return and they don't plan to file it until the due date? Well, then I don't have time for it to be accepted. And accepting the IRS accepting your return is important. It is not truly filed until it is accepted. And so what if they kick it back? Something's wrong, the EIN number or something kicks that back. I can't take that information and flow it through to my personal return. You can't take that information and flow it through to your personal return. So that's kind of why there's that stepped month in between, is so that there's time to finalize your personal return with all that flow through information.
That's right. That is right.
So, in case anybody that's wondering, okay, in Texas, we have informational returns that are also due.
True.
We are not going to go through a list of returns that are due in any given state because we would inevitably leave something off. But just a reminder that if you have a certain type of entity, it may also have other filing requirements other than just a federal or a state income tax return.
Correct.
Texas doesn't have an income tax, but we do have other informational or franchise reports. These can be state specific. And so make sure if you're self filing or it's your first time filing for a business, even if you have a preparer, that you've talked through what those requirements are, because it is ultimately, who does the responsibility fall on?
The taxpayer.
I know that we trust us and we do our best, but ultimately all things fall back on the taxpayer if it's done or not.
True. That's true. And speaking of other types of returns or reports, there is one that's been in the news lately called the BOI.
Whew.
Can we remember what that stands for?
Beneficiary
Beneficial owner. Beneficial owner. BOI. I'm googling.
Dr.
Beneficial,
Google Rescue.
beneficial ownership information report.
Are you filing those for your clients?
You know what? No, I'm not going to file them, and it has to do with my liability insurance carrier. In a lot of cases, our liability insurance carriers won't cover us for errors if we were to make them on that. But what I would do is assist one of my client owners in making sure that they had all the T's crossed and the I's dotted before they submitted it. So, but it is an informational report that you as a business owner can file yourself. You can do it online, and it's not a report that's going to go to the IRS though. It is going to an organization that we call FinCEN. Amanda, what does FinCEN stand for?
Couldn't tell you. I failed my pop quiz. I have no idea. It's an organization. They're also trying to kind of crack down on owners not reporting what they own and
Yes.
where they own it. And so I don't know the acronym. Sorry, guys. Just
I looked it up. FinCEN, FINCEN, stands for the Financial Crimes Enforcement Network, and it is a bureau of the U.S. Treasury Department. And yes, like you said, what they're looking for is fraud and foreign holdings, right?
And so they're looking for common ownership. They're looking for, I would assume, money laundering from one business to another. They're doing these things, honestly, because we have to.
Yes.
Somebody breaks the rules and we have to do it. And so they've implemented this new requirement. And the filing deadlines for those are depending on when you opened your business. So some of them are due before others. And it really is just an informational report because they are wanting to know who is the owner.
Who is the owner? Filing deadlines for that, let's see. A company registered to do business before January 1st, 2024 has until January 1st, 2025 to file the BOI report.
So our businesses were in existence before January 1st. So we have until 2025 to get those filed. Okay,
Yes.
but if a business opens tomorrow,
you have 90 calendar days after receiving your registration documents to file the BOI.
So I have a whole year, and everybody else that's new has 90 days.
Yeah. Now, what happens if we don't submit the report?
They're pretty extensive fines. I think it's like a daily occurring fine.
Let's see.
I want to say $500 a day, if I remember correctly.
How will they know that you didn't do it?
Well, because they'll be able to cross-reference. They'll cross-reference with others, with states and other entities, I would assume.
Okay. Let's see.
Or if you file late, or if you file a tax return, it's still a part of the Treasury, whether or not it's the IRS.
Yeah, you're right. There is a, there is a penalty of up to $500 a day, maximum of $10,000 for not filing.
So is it a one-time filing requirement or is it a every year filing requirement? Do you know?
I don't know.
I believe it's just a one-time filing unless something changes.
Right. No, it is not a yearly requirement. Mm-mm. It says you file the initial BOI report and then any corrections or updates as necessary.
Yep.
Okay.
So
That's good information.
those are big things kind of happening in tax world or compliance world, because BOI isn't really tax related. Do we have any other big things happening? I know that Congress is kind of
Yes.
a mess. Did you say
Um,
it was a mess?
do what?
I said, did you say Congress is a mess?
No, of course not. They're wonderful people. They do everything on time.
Wait,
They're very
they're
punctual.
on time? So we're not currently still debating 2023 tax law and regulation?
We are still debating 2023 changes. One of the big changes that they're talking about has to do with the child tax credit, right?
And bonus depreciation?
And bonus depreciation. Yeah, that's another big one, whether or not it's going to be 100% or 80.
That's a big difference depending on
Big,
what you
big,
bought.
that can be a big difference. And then the child tax credit, they're talking about a portion of the child tax credit is refundable. And they're in discussions on increasing the refundable portion. And the last I read about it, we were waiting on, I believe we were waiting on a House vote.
I haven't read on it very much.
Yeah.
Yeah.
So,
So my take on that is me reading up on it. They're going to change it back and forth 10 times before they approve it. So I don't read it until they finalize it.
I think probably true. That brings up another question. Let's see if you can explain this one.
Maybe.
Can you explain the difference between a refundable credit and a non-refundable credit?
Oh, yes, yes, I can. Okay, so if it is a non-refundable credit, it means that if the IRS on your tax return, it shows that you owe $1,000 of tax, and this is before you calculate anything that you've paid in or been credited, okay? So you owe $1,000 of tax. That's what they have said your tentative tax is. Then you have money you've paid in, so those estimated tax payments or money you've paid in on your W-2, or those credits that can be refundable or non-refundable. So all of that kind of goes into this lump sum and goes against that $1,000. But some credits are limited. They can be limited to how much pays back out, which is what they're talking about, the child tax credit. So if you had $5,000 of money paid in, credited essentially, you would be getting a $4,000 refund, right?
Right.
Unless one of those credits is limited or non-refundable. So what they say is, no, we will cover up to what you owe in tax, but we're not going to refund any of that to you on a personal level.
Mm-hmm. Mm-hmm.
So some credits are refundable, some are partially refundable, and some are not refundable at all.
Mm-hmm. One of the main ones that is refundable is the earned income tax credit, the EITC. And this one goes to explaining why some families with children who are considered low income and don't have a tax liability at all or have very little tax liability still get a refund because they qualify for the earned income tax credit. And so they are refunded that credit over and above what they may have already paid or not what they owe or not owe in income tax.
Correct. So that was done. And like Tammy said, I want to point out it is earned income. So it only goes against income that has been earned. It is not against investment income. It does not accrue for income that's not earned. So you don't get
It's not
credit
considered.
if you are
Yes.
not working.
So earned income is exactly what it sounds like. You worked for it. That's how you earned it.
Yep.
There is other income that the IRS considers unearned income or passive. Is that the word they use for that?
A lot of times they just call it unearned.
Unearned.
Unearned, we use passive kind of interchangeably in the accounting world, but it's not always passive.
Well, I guess that's true by definition. But like you said, unearned income would be interest on a savings account. What else would be unearned?
Dividends, stock sales,
Stock sales, yeah,
and
things
the
like that.
sale of your home if you have a gain on that. There are lots of things that won't be considered earned income. So it really is meant to bring those individuals who are probably below poverty level. I don't remember the percentages, y'all. I've been out of school a long time. They are out there. You can get them. But it's essentially to give them a hand up
Mm-hmm.
to get closer to not being below poverty. So yeah, that's one of those things that some people don't understand, but it is a very, very useful credit for a lot of people.
That's very good. Should we talk a little bit about filing your own taxes versus using a professional?
Yes. I think that we have to do that just because in this day and age, we have so many opportunities available to us to self-file. From I don't want to name anybody. I was going to name drop a couple companies and I decided we have a lot of options. And a lot of those options do make it where we feel very, very confident in doing that. If we are just a W-2 employee and we have kids, those might be great options for us.
I agree.
If we are a high schooler who accidentally paid in federal income tax, we might want to do those things. Those are very, very beneficial to get that money back. However, if you have a complex tax return or you have a complex family dynamic, so if you have claimed a kid before when you were not supposed to, it happens. Or if someone has claimed your child before when they were supposed to. Sometimes those family dynamics, if you have a court order telling you who can claim the child, you may need a preparer. Court orders do not overrule IRS law and regulations. I know that I get a lot of people who say, well, I claim every other year. The law dictates who claims based on who they live with and income amounts. And there are some intricacies there, nuances. If you have any of those, I would definitely encourage you to be speaking with an advisor. But I will not tell you do not self-file. I think that the more we can learn and do our own taxes, it really teaches us a new skill. It's one I had to learn in high school. I literally had a class. It was 1 hour, y'all. Okay, you cannot learn to do taxes in 1 hour. I just want to make that clear. But they really stressed the importance of what it meant to file taxes, and they didn't go through all the steps, but they told us about it. And so I think the more people that we can educate on that, the better. But if it gets too complex, know when to tap out and call in a professional.
Mm-hmm. I'm with you there. There are lots of options for people that are free or low cost. And if you have something simple, that's great. I hadn't really thought about the household dependent type status things. In my world, I think it's if you are self-employed, you have a side gig, you might want to use a professional to make sure that you get all of the deductions that you have coming to you, that you don't miss anything, that sort of thing. Definitely, if you are a partnership entity or an S corp entity, I would say unless you have a really good understanding of how to file those taxes correctly, please use a professional. Those are more complicated returns.
100%. And when it comes to, just a side note, when it comes to self-employment, we have to be weary about side gigs versus hobbies. And that is something that a professional can help you vet through. Is this something you're actually doing for profit motive? Or do you just sometimes make a little bit of money as happenstance?
Yeah, that's true. That can work out really well. And that can be especially important when you have a loss, because there are rules about how much of your loss can be calculated against earned income in certain cases. So using a professional who knows what those rules are and how that works can keep you out of trouble and from getting one of those lovely letters.
You called it a love letter earlier, and I thought that's great with like Valentine's Day coming up. But if anybody's interested in sending us love letters, try not to make it those kinds from the IRS.
Yes.
I'll take the ones that have a lot of zeros at the end. I like those love letters.
Dear taxpayer, you owe an additional $5,000. Love and kisses. The IRS.
Uncle Sam. No, Uncle Sam. Love Uncle Sam.
That's not what it says. That's usually not what it says, right?
No, guys, they're not that nice about it. Okay, so I think we promised some tips and tricks.
Okay.
What are the tips and tricks? And it's misleading to say tricks, y'all. There
are no tricks. Let's say that. Okay, that reminds me, and I have something I want to say about that. When you're watching social media, especially these ones that show these little videos, and it starts with, here's something the IRS doesn't want you to know, you can disregard what comes after that. The IRS wants you to know how to file correctly. They want to know everything. So trust me, you're fixing to get a half-cocked tax tip from somebody who does not know what they're talking about.
Wait, but I heard last year on TikTok that you can write off your birthday party.
Oh, shut up.
I really did hear that on TikTok. We had a whole discussion over this, which is why she told me to shut up. People really are out there giving that kind of bad advice.
If you own a business and you throw yourself a birthday party and you invite all of your employees and your clientele,
don't forget those meeting minutes.
And you actually, you actually conduct business during the party. It has a business purpose, and it just happens to be on your birthday, and there just happens to be cake. Then you maybe could call that a business expense. Stop shaking your head, Amanda. You know I'm right.
We're not giving half-cocked tax deduction advice. However, there are people that can say those things with a straight face. I giggle and laugh through them because they are Hilarious.
They say, I own a business. I write off all of my travel. Well, okay.
Ordinary and necessary.
You do that.
Ordinary and necessary.
Right.
That's the IRS requirement, in case anybody's wondering. It has to be
Right.
ordinary and necessary expense.
Ordinary and necessary. It can't be over the top, luxurious.
You know, like you can't go on a yacht for your birthday party.
However, I'm going to
no, you're not giving.
However, if you were the type of business where going on a yacht would be ordinary and necessary.
Are you working with those kind of taxpayers? I am not. Okay,
No.
well, so that's why I said
that's how
circumstances.
That's how, that's how Trump writes off his yacht. Because in his world, yachts are something that everybody has.
I mean, we are not
in my world,
activation.
In my world, we have paddle boats.
I mean, yeah, we have paddle boats.
Yeah, right off that paddle boat.
Susanna said we're having too much.
I know, Susanna.
Okay, so
this is an insight into me and Amanda on Zoom any given day.
Sorry, y'all are getting into my brain
about the scenario. Well, maybe you could write off your cat if
Megan, we will talk about that on our next call. We'll talk about if you can get a yacht and write it off.
What am I even doing with my life?
We will discuss that, Megan.
I love it.
Megan is an attorney who would never in her lifetime go to tax evasion. But that brings us to the great point. I want to make the point. Tax avoidance versus tax evasion.
Yes.
Tax avoidance, the legal way to avoid paying taxes. So it is the legitimate way. It is tax planning. Yes, we've gone off the deep end. Sorry. Tax evasion is illegal and is more than frowned upon and can wind you up in jail.
Correct.
So we joke, this is in jest, you guys can tell. We are not proponents of tax evasion, but tax avoidance, yes.
Most people that I've noticed this about people, most people don't look good in orange.
I think I do, but I don't want to not have the option. I think my color palette really is that warm palette. That's a side note, guys. We are not going to jail, okay? Okay. So tips, no tricks. What are the tips for filing?
I'll tell you one of my main ones is keep your finances organized, please. Especially if you are going to have a business return or self-employment income or something like that. There are too many ways in this day and age to keep records. There is no reason for you to have a spiral notebook and a shoebox full of receipts. Okay? And I say this to my clients, trust me, I do. I tell them, hey, it's 2024. It is time to get with it. So there are plenty of apps and systems that will bring your transactions in directly from your bank account, your debit card, whatever it is, so that you can categorize everything. And then all you have to do is just run a couple of simple reports and your numbers are right there and they're ready to be carried directly over onto your tax return. So please, let's do that.
Hey, Megan, Tammy, will you post Megan's question? She asked about a checklist forms. I actually have one of those. I don't know if Tammy does as well. That I can post the link to.
Let's
I
do
have
that.
one of those.
Okay. Yeah, that'd be great.
For personal returns. Business returns are a little bit more difficult, but I do have one for personal returns. Okay, in terms of tips, be proactive in what you're doing with your taxes. So be organized. If you're getting the forms already, put them in one place. Um, Really, it's as simple as that. The worst thing is when you completely miss something because you don't check your mail and you are like me and you have a stack of mail somewhere. But I can tell you, my stack of mail, I take all of my tax documents and stick them to the side and say, hey, this is tax related, this is tax related. So be proactive, in gathering your stuff. Communicate with your preparer.
Mhm.
We're going to throw out this same one as earlier. Don't wait until the last minute. One of the hardest things, once you've gotten into the cycle of being an extension filer, it's very, very hard to get out of being an extension filer. So, what does that mean? I, Amanda Adams, am not an extension filer, but we're going to use me as an example. If I don't file that April 15th, but I file my extension, I have until October 15th to file my taxes. Lots of times people owe at October 15th and they're having to try to figure out how to pay that. If you think about it, you are 10/12 of the way through the year at October 15th, October 31st, and you're still looking at the prior year. You're not looking at the current year. And so it kind of gets you into this repetitive process of you're always behind the eight ball.
You're always playing catch up. Yeah.
So we encourage you, if you file an extension because it's necessary, okay. Still don't wait till the October 15th deadline. You can file anywhere between April and October. So you can still file in June when that piece of mail comes in, or July. And for our self-filers, the information that you can find on the internet is great. But you need to be able to, just like we do, you have to back everything up. If we take a stance on a tax return, we have to have a reason to take a stance on a tax return. So anything you do when you self-file, I'm going to encourage you to use the internet, but use the internet twofold. So first, when you hear something like writing off a yacht birthday party, okay, you heard it on the internet. It is now in your brain. Now I need you to go find the IRS register that says you can do that. And if there is one, you better print it out and like highlight it and go ahead and staple it to your tax return, okay? Because it's not going to say you can have a yacht birthday party that you can write off. Not in those words anyway. But my point is, if you find something that applies to you, make sure you keep a copy of it.
Yeah.
And if you don't know, there are lots of free clinics that will help you. And some of those are not income-based programs. Some of them are just free clinics. They're students or other people who are learning how to do things. So much like a teaching hospital, they're teaching people. So, Tammy, any other tips? No tricks. We're not teaching y'all tricks. Sorry.
Tips. Receipts, like Amanda was saying, you have to be able to back up what you put on your tax return. So if you are taking deductions, this is especially true as a business or someone who's self-employed. we're not going to ask to see all of your receipts when we prepare your taxes, but we do expect you to have them. In the case that the IRS comes back and asks you to prove an expense is valid. So, so stay organized in the way that you keep your receipts. And again, it's 2024. There are many applications that can be used to capture receipts digitally. And you can take your paper ones and scan them, or take a picture with your phone, and you can load it up to this app where they will live happily ever after in the cloud. And you do not have to worry about, what did I do with that slip of paper? Oh, I think it's somewhere in my truck. That sort of thing. So use what we have available to us as tools to keep yourself organized and proactive and ready. And if you need some tips or some suggestions on that, reach out to me on LinkedIn or Amanda, because we use these things and we know what they are, and we can send you in the right direction.
And those are not they're not affiliate links for us.
Right.
They are
Correct.
just professional recommendations from
Correct.
what we've done in our professions.
Yes.
Yeah.
Yeah. I think this has been really informative.
And a little fun. I don't know if anybody else had fun. Sorry, y'all. I told you I was going to nerd out.
Or do you feel like you got it all out?
No, I could keep going on this for like a really long time. But I have a meeting. So
I know you have a meeting coming up, so we have to
I'm
break
going
off.
to have to reel in my crazy. And no, this meeting I should be able to be a little crazy. So I'm just going to reel it back. Like, I'll dial it in this much. And
you're at a 10. Dial it back to an 8.
Yeah, I need to be a 7 or an 8.
We need to be a 7. Okay. Well, this is really good. I think if you have any questions, send them to us. Post your comments, and we'll be back again with another show full of information for you guys. That's why we're here. This is our little passion project to help you guys out and give you a glimpse into our world.
It's a bit scary.
As it is. It can be. So, with that said, happy taxes.
Happy taxes.
We'll see y'all
I think
next
we
time.
should roll the outro and apologize in advance, guys. Thanks so much for hanging out with us. So
it's been fun. Thanks a lot. We'll see you in 2 weeks.
Bye, y'all.
Bye-bye.